Hello, hello, and welcome to Kunichi Value. Today, I have a very special guest, Yuka from Japanese IPO, who's an expert in Japanese stocks, Japanese IPOs, and a lot of things regarding Japan. So, Yuka, I'm so happy you're here, and I just would love for you to introduce yourself, who you are, and what Japanese IPO is, and your experience in the stock markets.
Ray, thank you so much for giving me this opportunity to showcase, the Japanese stock market, which is my passion for a long time. Going back, I began my career as a credit analyst, and then I became an underwriter within the commercial banking. And then I earned my CFA designation and then switched to the equity analyst. First, I analyze US stocks and then move on to a Japanese equity market. So I'm going to move on to why Japanese stocks, why the Japanese market. First of all, I'm Japanese. I'm fluent in Japanese. So that's sort of like the given. However, what really sort of fascinated me to analyze Japanese stocks in and out is my frustration. The Japanese market often get a bad rap for what's been dubbed the like a three lost decades. And for a long time, many investors has given Japanese stocks a cold shoulder. They see it as a tough nut to crack, and the business practices are so different from the West, and the language barrier they're very famous for it, and unfortunately. But stock market often move around thematic trend. The case in point is the current AI boom. And in Japan, it's so obvious. Japan has some issues. The most of all, the aging demographics, deflation or stagflation, or everybody complained about outdated governance issues. But my view is those challenges, the opportunities can come with it. And the companies which is offering those innovative solutions to these Japanese problems, they can grow by solving these issues. That's my take. So I thought, there are so many opportunities in Japan. But the problem is, it's kind of hard to sort of, finding those good companies because yes, there are so many like zombie companies too. But if you dig through it, there is the good companies, but then you have to sort of, do some homework. So, I'm going to just give you the example. I said earlier, Japanese society is hyper aging. I think it's just, they're not only like aging, it's hyper aging. And every time like I hear the low birth rate and then like pretty soon, 2/3 of the population is older than 60, 65 years old. So, there is a lot of companies like, helping to sort of coping Japanese society to deal with this aging issue. I'm going to talk about that, in the section that I'll highlight three stocks. I'm going to sort of highlight a company which is dealing with aging issues.
So I think it's a really good segue. So I understand that you know a lot about Japanese stocks. You are a person of Japanese descent. So obviously you understand the cultural nuances and obviously the language in Japan, which is a huge help. I know from myself analyzing Japanese stocks that so many companies, they don't produce any information in English and they have a lot of cultural aspects that people don't understand abroad. So I was just wondering if you could give me an idea of the unique features of the Japanese stock market that you might not be used to if you live in the US or if you invest in other markets globally.
So I'm just gonna start with the IPO. Because everybody knows IPOs, right? Initial public offerings. And before a private company become publicly listed, you have to go through the IPOs. So US there's IPOs. Any other country they have IPOs. But I think it's sort of what set Japanese IPOs a little bit different from other countries is Japanese companies tend to go public at the earlier stage. There is a reason for that. The companies go through the sort of listing procedure to raise fund. That's the first and the foremost reason. But its close second is public companies in Japan carry a lot of cachet. It's carried with a good reputation. When their customers view you, oh, you are publicly traded companies. Yes, we can trust you. We do business with you. The graduate in the college grad, they said, yeah, I want to, interview with the public companies first. Granted, these days there are some, the young folks they're opting for startups. I think that's a good change. However, there's still a lot of people prefer to stay with the stability of publicly traded companies. So, these IPOs carry a lot of value for those young companies. Some people, this early stage IPOs are viewed as negative, but I view otherwise. Yes, there's sometimes, the companies go public too soon. Maybe some companies, they just, put together a nice year, 1 year of profitability, and the next year they couldn't make any profit. That's happened sometimes. That's why you have to sort of, value and analyze, is this young companies are good to go for a long time? It's actually this, the early stage IPOs actually beneficial for the investors as well. If you know how to pick a good IPO, you can be like almost like you are like a private equity investor, but it's available to you on the publicly stage because you can catch the early stage of growth.
That's very exciting.
Yeah, I know. But then again, it can be very dangerous things though. Have you seen those IPO pop? Because there is, these security companies intentionally discount, offering price at the 20 to 40% discount the company's intrinsic value. That's intentional because then when they're listed on the first day, they're always pop. Have you heard of the company called Rare Job? It's like an online language learning service. When they listed like 2 3 years ago, the share was traded at more higher than 1,000 yen, and now it's trading at the 500 yen. So you have to be very careful which company to pick. So sometimes the people just intentionally skip the IPO and then wait for the couple years and then pick the stage called secondary IPO secondary, because then the company is on a stable growth path. But again, it's very tricky. You have to know how to analyze the companies.
Does that mean that there's a lot of trash on the Japanese stock markets if so many companies IPO because of status?
Yes, you're right. I hate to say it's I don't know, the trash. Yeah, some people go publicly prematurely. So yeah, that's why you just have to wait, and you have to sort of how to pick.
And Japanese people really seem to like IPOs. I've seen even my stockbroker, they have a lottery system for IPOs I've never heard about.
Um, if you can win the lottery, you consider yourself very lucky, because like I said, the IPO pop, because IPO is priced to go through this IPO pop, because intentionally it's priced low. So retail investors, retail meaning individual investors, they know their IPO prices are priced lower, so they sort of flock to the IPO, and that pushes the IPO price higher. And then if you won the lottery and then you have the shares, you sell into the strength. So some people, a lot of people do this IPO day trading. That add to the volatility of your IPO, and then that add to sort of depressed pricing of the IPO for like maybe a couple years. So again, it's a fact, and you have to know how to play it.
But so on that note, I'm wondering from your experience in covering IPOs, do you think any specific sectors or industries in Japan are where people maybe should look extra at for the good IPOs or successful future growth companies?
Um, yes, there are, but I'm just gonna give you a little bit of a caveat. The sectors goes in and out of favor, right? I'm sure you have seen that, right? So at this point, Japanese market favored first off large caps. That's why Nikkei is outperforming the topics by a wide margin. Topics meaning like, they include many other smaller companies. Topics is, Nikkei is only 2 to 5. It's the largest company like a Sony and Toyota. Those large companies are favored at this point. And then also I don't know, this may be too much of a detail, but starting this year, January of this year, new NISA program came into effect. This is very similar to in US, maybe like a 401k. There's a saving program, but that's publicly, like sponsored. In this NISA program, dividends doesn't carry any taxes. So that's why people flock into the high dividend yield stocks. So at this point in Japanese market, IPO and then also the growth stocks are not in favor. So I know, you don't want to market time and nobody can, do the market timings at always correctly. But I just wanted to, put that as a background information. And having said that, yes, if you want to, invest in IPO, the newly IPO'd companies, those companies who is sort of addressing Japanese problems, that population decline issues. Also, it's becoming very like a sort of interesting sector is utility power, electric power companies. Those are like a very capital intensive industry. That's why you don't see too many IPOs. But some company may go IPO this year, later in maybe December. It's always with related with the AI companies. Need a lot of the electric power. The government is sponsoring how to sort of provide this electric power in high demand.
You were talking a bit about risks before, but I just want to know big red flags in the Japanese markets, things that foreigners should look out for when investing in Japan.
Right. So in general, and I said, those companies which are addressing Japanese problems can be a growthy name. However, in Japan, every decision making takes a long time. So your temperament, I think, is a critical factor in investing. Besides this, the patience, there are some issues that you should keep in your mind. First of all, have you heard of cross shareholdings, Ray?
Yes, so that two or more companies hold shares of each other, right?
Yeah, and the Japanese company get the bad rap for this, but the Japanese, I mean, companies do the same thing, and then this has a historical necessity associated with the cross shareholdings because after the World War II, Japan needed to build the country very quickly, and then the trading company, this for on behalf of Japanese government, they went out overseas and they look for the natural resources that Japan lacks. So they did a lot of good things for Japan, and then they built the banks and insurance companies. And for the case of Mitsubishi, they have a car company as well. But the problem is this, the sort of cross shareholdings can make it very difficult to value the companies because you may sort of face the risk of double counting of equity value. You always have to, the company A owns company B. So you have to, when you analyze company A's value, you have to take out the company's B value. And then besides the valuation issue, like a conflict of interest, because if I own the company A, I may sort of like a sort of favor this company doing a business with company B because that's my benefit. So even though I need maybe paper and I own the paper company B, but maybe C companies, the paper quality is better and they're offering at the lower price, but I'm going to go with B. So the transaction, sometimes are not at arm's length. That creates a conflict of interest and then inefficiency. And sometimes, and corporate governance is becoming a huge issue because they share the board members.
Is this problem being addressed? Is it getting better or is it still a lot of cross shareholding?
Just yesterday, the Toyota subsidiary, they just announced they're gonna sell 4% of Renaissance Electric. They produce semiconductor for automotives. So, because Tokyo Stock Exchange issued a statement, Tokyo Stock Exchange doing a lot of good things lately, uncharacteristic. Because last year, you may remember, last March, they shocked when they issued this statement. Hey, companies trading on our exchange, if your price to book value is lower than one, meaning the market value is lower than your book value. So nobody is giving you, the value for your future growth. So, if your price to book value is lower than one, you gotta do something about it. So that sent a sort of shockwave to those companies. And then the company have started to do a lot of things. And many companies just raised the dividend yield. But that's a, right step. I mean, one step in the right direction. And then like later in last year, Tokyo Stock Exchange issued another statement saying, if your cross shareholdings doesn't have a specific strategic value, you may consider selling, decreasing those cross shareholdings. That's good, right? Because like I said, that's reduced the market inefficiency. And also by selling those shares that they own, they raise the capital, which they can use to either buyback or dividend or maybe the growth initiatives.
That's a very good point. And I'm glad to see this happening. I think in Asia overall, the Japanese stock market is coming out as one of the safest and most regulated ones, which is not how it used to be. I would love to segment into the geopolitical landscape affecting Japanese stocks. So, Japan is in a very rocky zone in the world. There's a lot of tension with China, Taiwan affecting especially a country like Japan, which is right in the middle of it and also very dependent on imports of natural resources.
Mhm.
So how do you think that affects the Japanese stock market and Japanese companies overall?
Sort of interest, the side effect of this geopolitical issue, and then oil price going higher, food prices going higher. It's changed Japanese economy from deflation to inflation, and then some people call this a bad inflation because it's not. It's like it's a imported inflation, not demand driven inflation. But inflation is inflation. And because of this inflation, it has pressure to Bank of Japan to stop the negative interest rate environment first time in 17 years. The Bain Capital, the huge private equity firm in US, they have been investing in Japan for the last 5-10 years. They have spent 5 billion so far. And the new CEO in the Asia region just, commented that they are going to double up their investment in Japan for the next 5 years. They're going to double the amount they have spent in the past 5 years because they say, Japan has come out of deflation environment. So in the mind of institutional investors, this inflationary is a slight, and yes, granted, it's exported, but this inflationary environment and the normalization of interest rate has a very positive impact.
And so, on the subject of geopolitical landscape, I'm just also curious about the effects of other countries falling out of favors in Asia. The big one being China, of course, which used to be a very popular destination for foreign direct investment, but is now seeing a lot of outflows of that capital. How is that affecting Japan?
Yeah, it's Japan is the beneficiary of that and the receipt of that the fund which escaped to China, and also I think some of the money went to Singapore. But I think it's not only the sort of last year China stock market had a horrible year. It's rebounding because this tension between U.S. and Japan, and then President Biden just talked about he's gonna double the tariff on a lot of Chinese goods. With top of the in his mind is in EV. So it's China investing in China, and the Chinese economy is it's they're gonna face some challenge, but it's the geopolitical tension and the weaker Chinese economy was the reason, for the tough Chinese market last year. And the market wise, I think the Chinese market is slowly rebounding, but geopolitical issues remained.
And do you think that the outflow now of capital outflow from China, not only in terms of the Chinese stock market, but also Chinese factories, Chinese manufacturing overall, do you think some of that is returning to Japan or is it going somewhere else?
That's a good point. I'm sorry. Yes. That because when we had the COVID and we had globally, we had the supply chain issues in many industries. And so the people and its, management realized, yes, we just cannot, centralize supply chains in China. And they started to diversify. And then also, many Japanese companies have started bring back their production facilities from overseas. Actually, not only from China, they have started to bring back production to Japan just to again to diversify. And they know, like yes, the Japan has a lot of natural disaster. And then also the weak yen, we cannot forget to talk about weak yen. That's why a lot of companies bring back those production facility to Japan because importing is becoming very tough these days. But then the geopolitical issues are the main factor. The production are coming to Japan. And, the most sort of like a famous one is TSMC's semiconductor factory in Kyushu, the west part of Japan. I think it's the first one is already in production. And then I've heard Taiwan Semi was very happy with the Japanese government and the Japanese construction company. Every sort of, phase of construction of the first factory went very smoothly. That's why they already committed into building the second and the potentially third factory in Japan.
So it means basically that it's not only because of Chinese tension that people are moving here for the short haul. It actually seems like Japan has a competitive advantage and manufacturing is here to stay again.
Because in Japan in the past was the semiconductor king, right? And then they lost the status. But the semiconductor production, Japan has lost out. However, equipment going into those production is still many Japanese control the market. The laser tech is a big, the good example. They own the 100% of the testing of the wafer. You probably know this better than me. Semiconductor, you have to be in a very clean environment. Any tiny like a scratch on the wafer, it's ruined the entire production, right? That's why, the testing of those, wafer is a critical aspect of the foundry. So, and then, Tokyo Electron owns the front end of a manufacturing. So when you look at the laser tech, you can tell it's a stock is like, by the way, I'm not recommending because it's a
Yeah.
very expensive stock.
That's very interesting. I think that's super interesting advice for anyone that's looking to invest in Japan, hasn't been in the market. But I want to wrap this up. And I just want to say that, my God, it's been insane to have someone that knows so much about Japanese stocks with me. But I want to ask you if there's anything you want to share to anyone that's listening or watching this about you, yourself, Japanese IPO, or any other information.
Yeah, okay. And that's my final thing, sort of like FYI is if you are remotely interested in Japan, you may want to just look at what you're interested in. Like if you are, avid manga readers, maybe you want to, look at like a company does those anime and those companies. So you may want to start with that. And that can be interesting. But it's that, yeah, this company is very interesting, but why they're trading at so low PE? There reason for that sometimes, right? They're cheap for a reason, and you want to avoid that. So, and if you cannot figure that out, always contact me. I'm easy to find. That might be an easy, like an easy way out for you. But anyway, I love to hear from you, and especially like those three stocks and Yuka, you're missing this point. I love to hear.
And people can find you at Substack, right? Japanese
Yeah,
IPO.
and also I'm very kind of active in LinkedIn, Yuka Marosek. And also a Japanese IPO, yeah, you can comment, send me a comment. And then you can find many more stocks in there, JapaneseIPO.com.
Oh, wonderful. Yeah, absolutely. I'll share the links in the show notes and make sure that anybody that wants to contact you for stock reasons will be able to. And other than that, I just want to say thank you so much for taking your time. And as always, this is just information. It's not a recommendation for any purchase or selling of any stocks or asset talked about in this episode. And with that, I just want to say I hope you enjoyed this episode. And if you want to know more about me and follow me, please go into konichivalue.com or my YouTube channel, Konichivalue. And if you have any interest in Japanese IPO or Japanese stocks overall, JapaneseIPO.com or Yuka Marosek on LinkedIn is the way to go. Thank you so much and have a great rest of the day. Bye bye.